In my channel, I've spoken highly about money market fund, and I think you get the idea that it's a low risk. But just like any other investment, I just have to clarify that every investment at the basic level has risks involved, and money market is not exempted from risks as an investment. Let's start with point number one. You could lose your principal. Now, I think this is one of the areas where people say that if you deposit your money into your money market, your principal is preserved. But I think it's very important to note that when you put your money into money market fund, this is how your funds are invested. Okay, so when you deposit 1 shilling, it's actually allocated in form of a share or a unit into your portfolio. So what will happen is that is the value of the principal. Now, you could lose your money under really extreme circumstances. However, there's no guarantee that the share price will remain at 1 shilling. And let's look a snippet of some of the deposits that have been made. The number of units is equivalent to the amount that was deposited, and the unit price is at 1 shilling. Now, as I said, assuming that things go south in terms of the economy, because these funds are not invested in just one portfolio, it cuts across so many investments. So it really has to be like a completely broken financial system whereby something adverse has happened and it's not sustainable anymore. And the reason I'm putting this across is it happened way back in 2008 in the United States, whereby fund managers could not maintain the share price of $1, like the same thing we do in Kenya as 1 shilling. Now in this case, what will happen is that your share price can go down, meaning that you are going to lose 2% of your principal. Second part is money market fund rate is a variable, and I think we all know this, is that they are actually daily published rates, where today you'll see it's 9, tomorrow you'll see 8.5, 8.2, goes down to 7, and so on and so on. And the truth is, nobody knows what the future holds. And due to this fluctuation of rates, the rates can stay lower for a longer period of time. Hence, you lower your long-term average returns. So this is the danger. If this happens, then you really don't get back whatever you anticipated into the investment. And let's pull in a chart here, a quick one, whereby I'm actually showing a 1-year inflation rate. This is in blue. And now we also have the money market fund in orange. If you see that September 2020, that's the rate of the inflation was around 4.2 and money market was around 7. In October 2020, the inflation was almost equivalent to the money market fund rate. However, in June 2021, you could see that there is a huge dip in money market that went below the inflation. So that means here, if you were to see how much were your returns versus the inflation, you lost at this point. So you have to be keen to understand what happens with your funds whenever they are being invested. Now, money market fund is well known to be liquid. Some fund managers have made it easy. You can do it from the app or short code and so on and so on. So you can do it whenever, wherever. Some of them you can pay bills, from the funds itself. But I need to point out that the liquidness of the money market fund, it can actually be the opposite. And your fund manager will suspend your cash withdrawals and you'll not have access to cash. And I think we've seen this. When the temporary suspension happens, it will hamper your income stream, because some people who have actually invested this money market foot into some other bill. Now, if you have an emergency and you cannot access your cash, and we know what happened recently in some of the fund managers that you're told, hold on. Of course, that was a different product. But what I'm trying to say here is that you be aware that this could happen to even the money market fund. Of course, there are regulations around it, but it's possible. It can happen for several reasons, and actually related to the first point. The question now, which is, I think everybody has been waiting to hear, is that where should you invest your money? And I think you have to do research whenever you do investment. Don't just listen or watch videos and say, oh, I think this guy said I can put my money into A and Z and and so on and so on. Do your research to make sure that you understand what all I'm giving you is some pointers on what you should be looking for. In my view, there are 3 important areas you should be looking at when you want to pick your fund manager. And one is, has to be licensed and approved by Capital Market Authority, which is the CMA. Research on the custodians of this fund manager. The size of the institution, of course, market share is a big deal, and consistency of the rate. And I know most people say, oh, even the small ones and the big ones, they do the same, and actually leads into the fourth item, which is with a question mark, the rate. This is quite subjective, but for me, before you go into the rate, do the first three. Understand the foundation of each institution in respect to approvals and licenses, research on custodians, and the size of the institution, who have been there, how was their money market fund performance. If there is consistency, then just go and make the call. But the rate will be the last item we should be looking at once you do the first three. And that is my guideline on how you should look for a fund manager. I know I have omitted fees and other charges by the fund manager, but I think those three are the most critical before you start. Thank you for your time, and see you in my next video.